Good morning, guys. Let's have a look at what we have. Before I start, if you want to learn more about what I'm doing and how I analyze and trade the market, you can join the Patreon. Feel free to check it out. Copy trading is also available for now on BitGet, and I'll look to add Blowfin in the coming future. If you're interested, just go to the link below. You'll find the Patreon link and the BitGet link there. Now let's look at the chart and cover both sides because both have technical reasons. I'll stay neutral so you can decide which scenario you want to lean toward. We'll start with a higher time frame, the 3-month chart. Here we can do simple TA. Mark out bigger levels, in my case SR levels or order blocks, which in the end are just SR levels. I've already done that here. The current HTF level is sitting at 93K to 82K. Now I'm just talking technicals, not my personal opinion of whether it will get hit or not, because that's not how I trade. To reach that level, price would first need to lose a few other levels, which time-wise gets tricky. Why? Because Bitcoin usually doesn't range too long in one place. On lower time frames, it looks longer, of course, but on the quarterly, it's usually 2 to 3 bars before making the move. As we're coming near the cycle end, whether it's a 4-year cycle or a 3.5-year cycle, we'll see. But anyway, that's the 3-month levels. Something important here. Bitcoin has never tested the 3-month order block in its history. That's a repeating fact. Will it ever change? Yes, maybe, but so far it hasn't. For now, that's actually a pro for the bullish side, that we may not go to that level. Now let's assume price does go to this level. Then it would be a big support level because it's a quarterly SR level. To reach it, price would need at least to close as an SFP, so for the bears out there, that's what you're looking for. An SFP and then continuation lower, but the quarterly OB would be the first HTF level to watch for. Now let's switch to the weekly time frame and see if there are confluences for either side. Yes, there are. We have a simple 50 EMA with its cloud sitting above that level. If we look at the current bull run, we've seen moves inside the cloud but no breaks below it. That's HTF confluence for this level now, and potentially even confluence that this level doesn't get touched at all for now, but I won't speculate, just pointing out technicals. Another confluence is the weekly SR levels order block we have right at this zone. That's our LTF point of interest on the weekly chart. Price already touched it once, and we had a nice rise. Now price is coming to level a second time, which is support, a big one. So here, personally, I'm looking for setups to get involved for continuation to the upside. Testing support is not bearish, especially with such confluence. Weekly EMA, SR level OB, 3-month order block, never tested before. That's 3 confluences lining up. Is an SFP possible? Yes, of course. And that's where I'll also show the bearish setups, which have the same right to exist as the bullish ones. First of all, the EMA is on the 3-day chart. Mainly, every time the 21 crosses the 9 EMA, price reached the 55. Last time we tracked that it was down there below the last low. Well, as said, this is a target that is moving higher while price is spending time above. Anyway, it's simple TA that can be added to observe the market. Now, out of 16 times, 2 times it failed to touch it. Well, technically just 1 time, and the other time it touched the line before the cross. Anyway, what's interesting for me is the hit rate, and that's basically around 87%. That's not bad at all. I'm not really trading EMAs, but to track something like that is very nice, as this gives you numbers to work with. Now, this had an 87% chance to hit the level, but as said previously, this level moves higher with each period, and now it's sitting not anymore at the last low, but here at the weekly OB level and is almost touched. So for now, we have a bearish confluence hitting a bullish SR level. Well, that's nice to see as both play out without actually being bearish. Anyway, now we switch to the next time frame. We have a similar setup on the 4-day. While it's not crossed yet, we have another 3 days until the close. We will come back to that, but for now, assuming price crosses the lines, well, the results here are more or less the same, but slightly better, just with 1 fail. And that was where price reached the target before it crossed. So if that's really a fail or not, I don't want to say. But anyway, the target for that, if that happens, because if there will be no cross, then it's a waste of time to look for that level to be hit. Anyway, that level is now at 105,200 and rising with each close. But again, as said, only if that crosses, otherwise it's a waste of time to look at that specific setup. So here we will come back on Monday to see where we stand. But where that level would be for now, again, is exactly in the weekly order block together with the weekly 55 EMA and the cloud, and below the OB on the 3-month, which is big support but never got touched in history. So as it stands now, it just adds confluence for that weekly OB here, because even the bearish setups find their end in the bullish SR level. Now, I also wanted something that is 100% accurate, because we don't freaking like 80 or 90%. We need 100% hit rates. For that, you can join my Patreon and get access to the White Rabbit strategy that has a high hit rate on spot for the entire history of Bitcoin on multiple timeframes. 100% hit rate available now. Well, that should be now like promotion voice. But anyway, jokes aside, join the Patreons on the copy trading program. So for that, we go simply one time frame higher, the 5-day EMA. Here we have technically a 100% hit rate on these levels once we have a cross. And even when it touches the lower EMA before the cross, it usually stays for some time there. So this needs to be watched for the next close, which is tomorrow, because here the target would be 102K and rising, because as said, with each close above the EMA rises. So don't write blindly the number 102, because if price spends 2 more weeks above it, it might be at 105. But anyway, for now, we have no cross on the 4-day or the 5-day, and only the 3-day reaches its target. But all of them would end the bearish setups in the weekly SR level, mainly the order block. So yes, I'm not bearish inside that level. If we extend it to the left, we can see it's the previous all-time high range. So logically, as long as it holds, I look for setups to make another leg higher to new highs until proven otherwise. Now, the only more higher time frame that I can find for a lower level is the 7-day time frame. That time frame would have a target below the 98K to the 96K. And remember, it's rising, but as it stands now, if price crosses down in the next 4 days or next period, that's now the only time frame that would have the target below the SR level. So if you ask me, I don't aim for that stuff until I see a confirmation. Even the EMAs are lagging indicators. This is basic stuff. What is interesting for me is purely crosses and what it does repeatedly after that. If there is no cross, I don't even bother for a lower level. So for now, for the bearish side, people need to watch for that. And of course, the first target is getting hit now on the 3-day chart. So no one should say I just cover the bullish side. But it's simple because for now, I'm bullish into support level, and I want to go with the higher time frames. So these moves down are meaning not much to me as long as support is holding. But again, now you also saw the bearish targets that have the chance to be hit purely because of history repeating it. And they get hit. It worked, and it will keep working. Just the thing to remember is they are not fixed targets. The same situation we had last time here at support. There was a lot of bearishness in the room, and I said this target can move higher, so support should not be ignored. And that's what I'm not doing as well. So now, while the bearish side is covered, let's have a look at the bullish side. Here we look first at the monthly level and start with the EMA as well, with the 5 EMA and 9 EMA length. Here we can see in the history that Bitcoin always reconnected with the EMA, whether it's bullish or bearish. Off the bottom in the bull markets, for example, in the last almost 3 years, it always reconnected and found the bottom there. Yes, it's not always a to the dollar scenario. As we can see, 3 times it closed below, but ultimately it was the bottom formation where it then reversed from there. And very often it was on the touch itself. Now it's sitting at 106 to 700K, and that's in the bullish weekly order block. So we have another confluence for this level. If we switch to another one, mainly the 9 EMA, here we have reconnects as well. And the closes below in the bull run happened even more rarely. Just one time it happened, and the next month was the bottom. All other times we saw just wicks below, and that's sitting currently at 111,800K, again in the bigger SR level that we have marked out. Here we would again have a target into the bullish SR level, and they are rising. So that's a bullish confluence for me, as long as price holds that level. We had now the 3-month order block that was never touched as it stands now. That can change, of course, and I adjust the stats after that, but for now, all the bearish targets are in the bullish SR level and above the 3-month order block, which if we think logically should be the confluence not to get touched. And of course, I will be wrong on that. If price simply breaks below the SR level, then yes, the OB gets touched, but that's a big SR level. So technically, we just could see a monthly higher low there, because now our higher low is at 74K. So for now, I go step by step on the higher time frames and look first for a higher low on the first SR level. And only if that fails, I look for the lower level where the process repeats, looking for a trade back up to the weekly SR level, looking there for taking profits and potentially a hedge for a short, because it could end up in a longer range or a lower high. But on the monthly outlook, it would be first a higher low. For now, it's extra confluence up here for a higher low in the weekly SR level, where also the bearish setups have their targets once the conditions are met, like the EMA crosses I talked about earlier. So I'm not interested in a lower level if the conditions are not met, because that would be simply speculating with no data behind it. And here I showed a simple thing, but with a really high hit rate to back up the bearish targets, but not lower, as long as we are in an uptrend. If we look at the monthly momentum, for now it's pointing up as long as Bitcoin is above 102K, and that's again inside our weekly SR level. This number will change on the next month open, so it will probably rise and we need to see where it will be. On the 3-month chart, the momentum is at 109.100K. That's basically where price is right now. And here's the thing, that would potentially confirm the bearish SFP if this crosses down. But keep in mind that's a high time frame that can take time. For now, it's in the bullish control zone, and a close even below that would not fully confirm it, but only losing the control zone with a cross down. Well, it only happened twice in history. Yes, every time it was the top, but every time it was below the bullish control zone. So it's again not the same story as before. Because here is the thing, the momentum can stay a long time on that level. If we look at the monthly, how often I heard that's the end and the bear market starts while price just moved higher and momentum stayed above the bullish control zone. The same can happen to the quarterly. So it's nice to have and to look for, but the same rules as with the EMA targets. It's not confirmed if there is no cross down, so it's a waste of time for now to aim for lower if there is no confirmation and price is hitting support levels. Now we look at the NASDAQ correlation, as I saw a few people mentioning it. What I'm actually looking at is the divergence between them, which is simple to use. Here we can see previously, NASDAQ rises and has a move down, while BTC keeps rising. So it's already not a one-to-one correlation like a few might think. Then BTC makes a move lower and makes a lower low, while at the same time, NASDAQ was already uptrending. And I see people around saying, NASDAQ is strong, what happened to BTC? Is the correlation now ended? Well, simply a lot of people are too lazy to open the chart and check it out. Anyway, we see NASDAQ begins the drop and the rise before BTC. And then when BTC makes the lower low, NASDAQ makes a higher low, which was then the divergence signal I'm looking for, and not the exact correlation, because it doesn't make much sense to look for exact correlation. Next example. NASDAQ rises, making new highs after new highs, and BTC has an intrastructure downtrend. And what happens afterwards again? We see the divergence. BTC makes a slightly lower low and NASDAQ a higher low, which was the bottom formation for Bitcoin. And yes, you might say, what about the times in between? And yes, sure, we had a few of them, like here in between 2 times, and both led to rises on BTC. Not new highs, but over 20% rises. Anyway, afterwards we had a bigger move on both, and that was the bottom formation. Now, the next one, to be fair, was a bit tricky, but overall it led to the bottom. But here's the thing, that's just one chart to look at, so that's never the right signal, just by looking at one thing. Anyway, that was again a bottom signal. Not the same as the previous one, but for this low I had other reasons as well. And now we come to the next example, which we have now. Bitcoin again makes a lower low, while on NASDAQ we see a rise. Looks familiar if you ask me. For example, the first example that I showed. NASDAQ rises and starts a correction, and Bitcoin makes a new high. NASDAQ keeps rising and making a higher high, while BTC a new low. So the stuff that is repeating is actually a confluence to look for, at least a bottom formation. And then we shall see how the rise ends, in a longer sideways range or in a new low. But that's the same thing. What happened in the past is happening now. With the new quarterly open coming soon, that's why I have the date marked out there. And here we come to the quarterly stats with September, keeping in mind the potential divergence and keeping in mind that the bearish target from the EMAs, if confirmed, would also all be in this area in the bullish SR level, until proven otherwise. So again, I'm not saying there will never be a cross or something like that. Of course it will be. But what I want to say is, first we need to look if the conditions are met. If yes, then look at what the target would be. They are all now inside the SR level, and it will only be proven wrong if the level gets lost. And that's not my personal wish. That's simply the chart showing the data. So I don't count it as my fail if that happens, because I just show you the data and you think for yourself if that's logical or not. Okay, now let's look at the September and quarterly stats. Here I show now the simplified statistics. I usually don't fully follow it because I make them myself, but to visualize the idea, it's enough for now. So what we see here is Q4 for Bitcoin. We can see 12 of them, 4 red and 8 green. I have them marked out here. And what we can see, the bullish quarter led to the end of the cycle. Not all, of course, but in terms of cycle length, every 4th year it was the top, not before that. So we can say this is something that worked and hasn't failed so far. So is it the right thing to say, this time is different? I think I hear that every time, and every time it's the same thing. People ignore what the chart is showing. Of course, it would be a big fail if I talk about it now, and it really is different this time. Well, I'll take it easy, haha, but it would be funny, of course. Anyway, as said, it worked for now, so I keep using it. For now, the top was not before. It was on the last Q4. The red quarterly was either the bottom formation or the bottom itself. So that's a simple analysis. It worked before, and most likely, unless I'm the unlucky one who talks about it when it fails, it will keep working. And I simply don't go against something that hasn't happened before. Price needs first to prove me statistically wrong. Now, of course, one can say it's just 12 years of data with the cycles. Well, the Bitcoin 4-year cycle is not invented by Bitcoin. If you research, you will see a lot of bands and other charts follow a 4-year cycle. So it was already there before Bitcoin. Not only Bitcoin data, which a lot of people think when they are only in Bitcoin. Anyway, now we have the quarterly and the cycle. Now, let's have a look at Septembers that were green or red in the 4th quarterlies. First of all, we can see on the schematic here, when September was green into the last period, it usually led to the next month being green as well. But taking the Septembers before Q4 for the cycle. First example, September green, we saw the rise in the next months with Q4 closing green and making the top. Next example, September red, next 3 months green, together with a positive Q4. Next example, September red, we saw a rise, or the quarterly ended with a big wick, but still a green close, and almost a 50% rise. And now we come to our next Q4, which is now, month almost over. Usually in a bull run, if we see a positive September, we had the next months rising with green months. If we saw a red September, we saw a rise in Q4. So basically, no matter how this month closes, it's just statistically saying we get at least one more rise or a few more months of higher prices. And I need to repeat it. It's just the logic that I see has worked over the years. At some point, it might change, but hopefully it will not end with me talking about it the first time. In that case, yeah, shame on me. Anyway, I will make money on that. If you're asking yourself how, well, join my copy trading program and you will see, or try out the rabbit box strategy. Okay, now let's have a look at the volatility on the weekly time frame. Here we can see a simple thing. When the volatility is low in the extremes, usually it's a bottom formation or really close to it. So I marked out the 24 to 25% volatility, and every time when it comes to extreme lows and afterwards crosses the EMA back up and moves above 25, it's a zone from 15 to 25%, then that was a bottom formation. Then we had a bear market. It confirmed it and had a flush down, yes, but ultimately the bottom. The other times it made higher lows. Anyway, not for 100x trading. Next example, Volatility at extreme lows cross above, price makes a higher low and rises. And here we come to this bull run. We had 4 of them. We see every time volatility at lows. Yes, price can make some new lows while it's forming with low volatility, and once it crosses the EMA and moves above 25%, it was the bottom confirmation. And now the same is happening here, with volatility at extreme lows on the weekly time frame. And on the monthly, it has new lows, was never lower in history. So it's either a change in behavior, and we will for the first time see the extreme volatility play out to the downside, or it will be like it always was, a bottom formation. A bottom formation where the bearish targets are not confirmed now because we had no EMA crosses on the lower time frame. And even if they cross, they would be in the first HTF support area, with the max pain being the quarterly OB that was never hit for now, so not expecting it for now. With the weekly 50 EMA close sitting all at the same area as the bearish targets, if they would be confirmed. And with the new quarterly coming up, where it doesn't matter if the month closes green or red, we saw rises in the entire history. So even if it would hit the level where people are aiming for, like 90K or whatever, do you think I will be bearish if all this comes together? A lot speaks for now that we see a rise from this area, and not from much lower levels. And with that, we come now to the local time frame on the daily. And what we see here is my cyclo long indicator. Again, a simple thing. Whenever the line gets touched and a buy signal prints, we see a bottom formation. Even in bear markets, we see at least a rise first from this level. While in bear markets, it keeps grinding down. On the touches with confirmation, we see a rise. In bull runs, it's often the bottom formation for higher price and new highs. Of course, some deviation is possible. They are not big, at least not what you'd understand as big. But often it's the confirmation for a bottom, and we see a rise, even if it's moving lower afterwards, where it again confirms a bottom, like in the examples in this bull run. Afterwards, we see a rise to the cycle high of this indicator, where it either finds a top and ranges more, or makes new highs. And now, this cycle for the daily is sitting at 108,200. So when it gets a touch, I would expect the same happening as it always did when it confirms the buy signal. It's usually not immediately at the touch, as it needs a condition to be met. As we can see here, for example, on the last all-time high, it touched it, but the confirmation came in lower. And by looking at our level, it's sitting exactly here at our first SR level of the previous range and the weekly order block, with all the levels we talked about before, with the bearish EMAs if the condition will be met. But until then, this is here, the first bigger level, where I will look for the signal to flash once it gets touched. Now I add to that my lunar cycle, and that's coming in by the end of the month. That's where I usually also look for a bottom formation, and that's again the extra confluence for this level here. Only if lost, the weekly OB lower, where the bearish targets would be. But as long as they are not confirmed, they can rise. So I can't aim for them logically if they are not confirmed. By spending more time, they can easily rise to this level up here where we are at now. So logically, I have to look first at the first levels and go step by step. That would be this SR level, from where I had my previous longs, and then it hit its TP on the rise, while some of the positions are still open. Now it's a bit messy on the chart, sorry for that, but that's now the local level. First, of course, I had taken profit on that long from this level, which was again matching into my cycle analysis. And now price is approaching the same level with the confluence of the daily cycle and the lunar into the new quarterly opening soon, with the bigger support area that we have here, with some of the bearish EMA targets getting hit and others not confirmed. And even if confirmed, they are all in this area as it stands now, with the monthly EMA that is here. With funding rates slowly decreasing as shorts come in into a support level, with the NASDAQ divergence, with momentum staying in the bullish control zone, with the volatility that is at extreme lows where we could see back-tested bottoms forming. And that's not even the most part of the analysis I share here. Anyway, what I want to say, am I bearish based on what I showed, or do I need price to prove me wrong first before I should stop looking for higher prices? I think for me, it's a clear picture. No matter what is forming here, be it a sloppy channel down where we could see a new local low, or being a rise from here, a lot of things are speaking for higher prices. Now, of course, it would be nice to buy at the lowest point, but I should never forget to go step by step, because if I would not go step by step, I would often be sidelined, like on the last move or on the previous all-time high range where I traded it multiple times, and it failed once. In the end, I longed it again from the lows. But the sentiment often looks like that on a lot of YouTube channels or Twitter accounts. Price rises, they call for lower, 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 and price just holds support and makes new highs. Then it drops, and they say, "I told you so." So it's not really the right approach, especially if then they start to call for shorts when it starts to rise again, because often the low was not enough for them, and they say, "Fake pump." And if they had a long, then they get out too quickly, which is nonsense. They call for lower, but then get out on the first leg up and start selling again, and the game repeats. Lower, lower, lower. Price rises every time, and when they get their chance, it repeats again, taking TP too quickly, or they want it even lower again. That's a behavior pattern that repeats all the time. And statistically, they are right from time to time, because people tend to forget fast what happened with the mistakes they made. Anyway, sorry for that spec. If someone feels uncomfortable with that, it's not my fault, and you better start to journal what you are doing and not blame other people, because I use it as confluence for my analysis. And with that, we switch now to the lower time frames and look at the averages for today. By the way, the momentum on the daily is slowly coming to a bottom here. Still, it's in a bearish control zone, but it can slowly turn into a bottom formation. Looking at the averages, we can see the average loss is at 107K. That would be a move inside the daily cycle level, if you remember the one I showed, which is sitting at 108,200K. That's an SFP of the monthly low as well. We can see the average is slightly below the monthly low. And lower, we have our old high volume node from the entire range and some structure stops together with some EMAs that I showed before. They would be in this area. But as said, for me it's a step-by-step process. For now, price is at the same area where it bounced previously, and I look at it as a support level. The first one was slightly higher. That's from where I hold my long where we already had a rise, and it hit take profit one as I updated. Now, I didn't close it, and I will look to add to that trade when we get a new local low here at the monthly open, previous yearly high, the overall first SR level here, together with the daily cycle level that I showed, which is at 108,200. And I will closely observe what price will do at this level. If I start to see a close below, that's of course in a level-to-level perspective, the first sign of weakness, and we'd see acceptance back into the weekly order block that I showed. Then, most likely, some EMAs would confirm the cross. That's where I don't want to sit in the long, and I would make a new plan. Whether we will see then signs of strength where price breaks above that level, or simply a lower level where I look for confluence and a setup to be formed. For example, if it moves lower now into the cycle lunar timing and hits the high volume node and reclaims the level fast with no closes below on a daily, or whatever time frame we'll have there. But daily is preferred. If there's no reclaim and bounce, then yes, this time I would be wrong on that trade. From there, we could wait for more information or lower levels. For example, this supply channel that we have down and other EMA targets. Until then, this is the support area for me where I take action. I have taken it a bit higher, same as the previous time. And here I will add and see if the market proves me wrong or if it's another win where I would look for higher targets. At least the weekly open as a target, because we have here a grinding down structure with poor highs again. And it's the same story as with poor lows. At some point they become targets. I will not short on the rise, as long as I think there are more bullish signs than bearish signs. Per my other statistic, the top is not in now, no matter what bigger range we form here. If that changes, I will update, of course, in the Telegram group. But as it stands now, I'm looking to add to the long. From there, patience will be needed to see what the market will do. And with that said, the update comes to an end. Thank you for watching and enjoy. If you liked it and want more daily updates, join the Patreon, where you get a monthly statistics sheet and a basic journal. And depending on what you choose, the white rabbit strategy for spot with a 100% hit rate. Though sometimes a lot of patience is needed and no leverage to be on the safe side. You are also welcome to join the copy trading program. With that said, I wish you a nice day and see you in the next one.